$400,000. Guggenheim's Scott Minerd says the cryptocurrency's fair value still has a way to go, even as it hits record highs. Matt.
Let's take a look at European futures. We're seeing gains really across global futures today, and Europe is no exception. You can see almost 2/3 of 1% are the gains on the FTSE and Eurostoxx 50 futures. DAX futures up 1%. So it looks like we could see another big gain in German stocks, even as we suffer through this harder lockdown. Here's the global macro movers screen. On the left-hand column, you'll see equity indexes. As the trade starts to hit live, that column should start to populate. Typically, the FTSE is the first out of the gate, and I'm starting to be skeptical about whether or not this GMM screen is correctly loaded. Maybe none of the equity indexes have opened up yet, but no, I see a FTSE trade indeed up 0.5%, CAC Quarante up 0.5% as well, the IBEX 35 up 0.5%. So we are seeing gains across the board. I'll go ahead and take a look and make sure that GMM screen has the correct parameters. Nonetheless, European markets are opening higher. As U.S. lawmakers get closer to a stimulus deal, we get closer to a Brexit deal. Joining me now is Emer Daly, Macquarie FX strategist. Emer, let's talk first about what's going on in Washington, as it seems to have really been the driver behind equity markets, and I wonder how much it has to do also with the weaker dollar, the Bloomberg Dollar Index down at 1120.
Yeah, I think we've seen, just this kind of unrelenting optimism from equity markets, and that kind of constant narrative of positive equities, weaker dollar just seems to be playing out. And everyone's very much focused on this US fiscal stimulus deal that we're inching close into. I have to say, at these kind of very extended levels of the dollar index, we're a little bit worried, and it could be a case of kind of, buy the rumor, sell the fact. We've seen, very extended positioning in the dollar, kind of an unrelenting kind of bullish equity market run. But we think that degree of market optimism is now a little bit complacent, and we are worried about a pullback.
Yeah, I mean, if you look at where good morning to you, Emer. If you look at where the dollar is now, what do you think it is responding to overnight? I mean, it is so much weaker, down 0.6% on DXY, which is actually quite a big move overnight for this time of the European session. And it's broad-based, the rally on the other side. So the euro's higher, the pound is higher. We know reasons behind that one, of course. The Aussie, the New Zealand dollar, some of the emerging market currencies as well. Is it something that the Fed did or didn't do, or is it just the move into riskier assets just continues to drive the dollar weaker?
I think you're absolutely right. It's just equities. I mean, arguably yesterday what we got from the Fed was a lot less dovish than we were expecting. I mean, substantially was there, enhanced forward guidance. So I think it actually really disappointed dovish market expectations. I would almost say it's just the story of, QE, excess global liquidity, and it's just driving stocks higher and driving a weaker dollar. We do think, that optimism is kind of at risk to anything now. For example, if there's issues with vaccine take-up, if there's kind of adverse side effects, once we get the vaccine trials and they're subjected to the rigors of peer review, will that kind of market optimism start to hit a roadblock?
There's a lot of debate about whether or not it's a currency, and I don't see Bitcoin listed anywhere in your notes, but surely it's at least a part of the universe that you cover. Emer, what do you think about 22,000 on XBT USD?
Yeah, it's definitely a story that you can't get away from, and it's probably, we don't look at, in particular, but it is just the debasement of fiat currencies. And very clearly, markets are looking for an alternative. Where I kind of specialize is in EMEA, and I think you've just seen that massive drive, in for return, that investors are willing to kind of go at, the credit, the risk spectrum, just in scope of return. I mean, within the EMEA space, we've seen foreign inflows into local currency sovereign bonds really just turn around, even despite, severe idiosyncratic risk. For example, South Africa, we've really seen a massive run into their sovereign bond market, despite concerns over, threats to Ramaphosa's presidency and a massive escalation in debt and overall leverage within the economy.
What should we be looking out for from the Fed, Emer, as we go into 2021? Jay Powell perhaps sounding a little more upbeat than he has over the last 9 months or so in yesterday's press conference. Of course, that contrasts starkly, as do many things of a market nature, contrasts starkly with the experience, the very real-time experience of the virus on the ground. Those two things have been disconnected for a while, but some of the data is worsening as a result of the story on the ground. So retail sales, for example, poor, coming in below expectations, revisions to prior data. What should we expect to see from the Fed? It seems they could be on hold for a long time, but other creative policies?
Yeah, I think it will be interesting, in the statement yesterday, there was actually no specific mention about, a successful vaccine or actually the second wave and the damage it's doing right now to the economy. I think it'll be interesting when they actually start to talk about reducing the pace of purchases. Kind of overall, actually, the US economy has had a very strong rebound from obviously the sharp downturn in the second quarter. And you do see kind of that ferocity of the US economy, that it has an incredible ability to bounce back. And, obviously the US hasn't had the degree of fiscal stimulus that we've had over in Europe. So we really do think that that kind of growth differential story will turn in favor of the US, which is why we're actually kind of into the later half of 2021. We're more negative on the dollar compared to broad G10.
Is there some point at which other central banks, Emer, have to act when their currencies, I'm thinking of Europe, of course, but there are a lot that are going to see their currencies really climb, and that's going to disadvantage them in terms of exports, and that's going to import, to some extent, deflation?
Yeah, absolutely. And I think what the market has really been watching at the moment is ECB speakers. And, when they keep saying that the euro's strength is an inhibitor to getting inflation to target. I think the ECB have usually been a lot more creative in terms of their policy options, their policy instruments. Going through their policy statement on the release is like dissecting something. There's so many kind of levers that they can pull in terms of easing policy. So I think when you're looking at relative monetary policy, I think the ECB is going to be a lot more dovish than the Fed going into 2021.
Okay, Emer, we'll get further thoughts from you on Europe shortly. Emer Daly, Macquarie FX strategist, she stays with us here on the program. Coming up, as we mentioned, the euro tops 122 against the dollar for the first time since 2018. The common currency has surged almost 9% this year. We'll get further thoughts from Emer on that. We'll also talk about sterling and the Swiss franc. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. 10 minutes into the session, looking at gains of almost 1% here in Germany, more than 0.5% on the CAC 40, about a third in London. Let's get the Bloomberg Business Flash. For that, we go to Laura Wright. Laura?
Thanks, Matt. Bitcoin has hit a new record, topping $22,000 for the first time. And Guggenheim's Scott Minerd thinks it still has a long way to go. He says it could eventually climb to about $400,000. But the rally is polarizing opinions. Some think it could lead to a meltdown, similar to the one we saw 3 years ago. Texas is accusing Google of reaching an illegal deal with Facebook, conspiring to maintain a chokehold over the lucrative digital advertising market. 10 states have filed a lawsuit which targets Google's central role in the buying and selling of display ads across the web. Google says the suit is meritless. China's Starbucks rival is paying a fine to settle U.S. allegations it misstated its revenue. Luckin Coffee will hand over $180 million to resolve the claims it intended to give investors a false impression of rapid growth. The SEC says the chain fabricated more than $300 million in sales. Luckin neither admits nor denies the allegations. Nissan plans to ship its new electric vehicles to Europe from Japan. It won't be producing them in the UK, however, as the prospect of a no-deal Brexit is throwing the future of the company's Sunderland plant into doubt. The car maker has warned multiple times that the 10% tariff on cars from a no-deal Brexit could spell the demise of the factory. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura Wright here in London. Now, the pound and the euro advanced to their highest levels in over 2 years. This comes as optimism on a post-Brexit trade deal coincides with a weakening dollar. Ema Daly, Macquarie FX strategist, is still with us. Really strong movement then in the euro and in the pound, and the dollar weakness. We've talked about that and where that comes from and how much that concerns you, and it is a pretty consensus trade into 2021, isn't it, Ema? Let's take these in turn then. Let me ask you about the pound and the strength we've got this morning, 135.79. So just how high does the pound go on a deal, do you think, Ema?
We're thinking 143. So even though the market is extremely optimistic at the moment, we still think if you look at the options market and risk reversals, they're still pricing in some risk of a no-deal Brexit. I think the market, has lived, with this overhang of no-deal Brexit risk for 4 years. So on that announcement effect, we will get a sterling rally.
So what does the Bank of England then do? I mean, today, with the known unknowns, and then later with the deal?
Yeah, so I think today the kind of broad consensus is they're just going to sit it out. They want to kind of retain whatever policy scope they have left, and just in case there is a no deal. What they could do is say something in the statement, that they're ready to act, that they're ready to provide more stimulus in case of an adverse shock, which would be a no deal Brexit. I think what's interesting actually is if you look at the rates market, we very quickly swung around in the UK from pricing in negative rates within the next year to basically pricing in about a 7 basis point rate cut over the next year. So potentially, into 2021, we could see them, cut the benchmark interest rate to 0 or increase quantitative easing. And the Bank of England hasn't been the most aggressive when it comes to easing policy, but arguably they don't need to. They are kind of soaking up all that additional gilt issuance.
What do we make of the Swiss franc at the moment then, Ema? Yesterday, of course, we saw the US tagging Switzerland as a currency manipulator, deciding not to do the same with certain other countries. We are working our way also up towards a rate decision from the Swiss Central Bank, and they do like to intervene in these markets. So what do we take away from the most recent developments there?
Yeah, I thought it was so telling yesterday, just the price action that, when we had that designation, we had the Swiss franc appreciate, and then immediately the SNB came out and said, we could increase further. And the market just backed off. I think the market does have post-traumatic stress disorder when it comes to the Swiss franc and on. the SMB. So, it completely reversed the moves yesterday. I think into the rate decision at 8:30, I'm looking at the statements. I want to see if they continue to say that the Swiss franc is highly valued and a continued commitment to intervene. Obviously, if they kind of dilute down that suggestion, you could have Swiss franc appreciation, but I think the risk of that is very limited. There isn't that much kind of repercussions that would really negatively impact Switzerland if from the designation as a currency manipulator.
What are the exciting kind of under the radar pairs for you, Emer? I mean, everybody in the world watching cable, of course, watching the euro dollar. What do you think we're missing?
So I probably think going into 2021, what you have is a more clear narrative to be long EM. I think we're going into a very positive, this is the comeback of the carry trade. We have, positive global growth story. We have a reach for yield. And I think what we've seen in EM is that investors are just willing to overlook, a massive deterioration in fundamentals and an escalation of leverage and really go long EM assets. As I said before, we've seen kind of foreign investor flow into EMEA turn positive. And I think EMEA does have good idiosyncratic stories, which have kind of flushed out positioning. For example, in Russia, where, at the 4 months heading into the US presidential election, we really saw Russian assets underperform what they would usual to their correlation with oil prices and with equities, as markets really began to price in the risk of, a Biden presidency and an increase in US sanctions risk. We haven't seen Biden really say that Russian sanctions are his priority. I think he will focus on getting a nuclear missile agreement in place first. Seems to be a policy priority. And I think, Russia's already starting to kind of constrain at the fiscal side. They're bringing down leverage. So they won't be kind of as burdened with fiscal debt. And the recovery has been quite strong. A lot of the economic performance is showing a very strong rebound there.
Emer, you gave us some thoughts on the euro. Expand on that a little. We talked to some currency strategists who say, look, the euro's strength, it's not a question of levels for the ECB. It's all about the pace of change. And if the pace of change becomes too fast, that is what they object to. I mean, it seems to be strengthening pretty quickly right now, Emer. So is there anything for the ECB to worry about here?
Yeah, I think obviously inflation is very low. They are very concerned. The issue is how much impact do they actually have over the euro's level? Are they just kind of price takers in this market? They've obviously, tried to ease policy at their last meeting. I think really the most potent way to kind of dampen down the euro is further cuts to deposit rate. That's kind of the clearly most negative euro story that they can do. And there is potential for them to do that. I think a lot of the euro's rally, if you look at from March where we are now, a lot of it's actually been driven by speculative positioning. And that's a massive overhang and a massive headwind that the euro is going to face going into 2021. We're not as positive on eurozone growth as we are, for example, in the US. And we think a lot of this maybe is because of a rotation in equity. So out of kind of US growth stocks, which look to be overvalued, and into more cyclical value stocks in Europe. But there's a degree to which that play is just going to be extended. And we think actually on a broader long-term basis, your expected capital returns are going to be much stronger in the US. So we're looking at 124 in euro dollar. We don't see it really extending beyond that.
All right, Emer, thanks so much for spending some time with us this morning. Really appreciate your perspective. Emer Daly there, Macquarie FX strategist. She's going to continue the conversation with Anna and myself on Bloomberg Radio at 9 a.m. UK time. So just about 40 minutes from now, you can tune in on London DAB or, of course, online at Bloomberg.com. Coming up, Bitcoin pierces through $22,000 this morning. Is it on its way to 400,000? We'll discuss Scott Minerd's bullish call on Bitcoin next. This is Bloomberg.
activities we were planning on, they were planning in Lamborghini, were reduced to a minimum. And this is for sure caused by the pandemic. We hope that we can start, let's say, in late spring next year with the presentation of the cars and have more of these things coming up. For the second part of the year, we are much more positive for the second part of 2021.
That was the CEO of Bugatti and now Lamborghini again. Stefan Winkelmann is back speaking to me in an exclusive interview. Let's check in on your markets right now. We have gains across the board, looking at some decent gains here in Germany. The DAX up 0.9%. You can see the FTSE up about 1/3 and the CAC almost 1/2. No change at all in Madrid on the IBEX 35. Now, speaking of gains, Bitcoin is surging to record highs once again as the cryptocurrency surpasses $22,000 this morning. Scott Minerd of Guggenheim Investments thinks it's a fair value, or thinks that its fair value still has fundamentally a long ways to go.
We made the decision to start allocating toward Bitcoin when Bitcoin was at 10,000. It's a little more challenging with the current price closer to 20,000. Amazing, over a very short period of time, how big of a run-up we've had. But having said that, our fundamental work shows that Bitcoin should be worth about $400,000.
Joining us to discuss is Bloomberg's Danny Berger. So, $400,000 is very bullish. What are the arguments you're hearing from bulls like Scott on why this rally should continue?
Well, I should say analysts are saying, at least for the rally we've seen yesterday and today, a lot of it looks like short covering after we went through that $20,000 level. We actually are just 1 percentage point away from hitting 23,000 at the moment on Bitcoin. But fundamental analysis of Bitcoin, is it an oxymoron? But if anything, the argument really has to do with what we're hearing, at least from institutional investors, is that this has to do with easier monetary policy, stimulus from both central banks and on the fiscal side as well. And the threat there is that you get a debasement of fiat currencies. So you turn to Bitcoin as an inflation hedge, and also because supply of Bitcoin is finite. The float is somewhat capped, which means that you get this big price appreciation when more people are buying it and are interested in using it as an inflation hedge. That does make it vulnerable if policy tightens, but for now, that's clearly not a concern. Now, as to the argument of whether it's a store of value like gold is, we hear that every now and then too, but we have to remember Bitcoin still at this point is speculative, whereas gold is not.
Yeah, what about the role of retail investors in here then, Danny? This has been much discussed, comparisons with 2017, for example.
Morning, ladies and gentlemen. I'm going to place an order to buy euro. The price I'm looking 122.309. So let's place order. As you know, whenever place or whenever buy anything before will get executed, because this is real-time trades with real money, no demo account. So this is just to remind for all new clients and the customers. Okay, I placed the order. So let's see if and when I will get executed. 22 309. Okay, let's wait.
Mechanism that's next. This is Bloomberg.
Welcome back to the European Market Open this Thursday morning. We are 30 minutes into the European trading session. We've been fluctuating, but always to the upside this morning. So stocks here in Europe are going higher this morning, up around 0.5%. The DAX outperforms. The UK market is a bit of a laggard. The IBEX also under pressure, so that's a particular market fairly flat. We've seen some interesting moves in Polish stocks as well, in particular with regards to insurers versus banks and the different rules that exist now for paying dividends. The biggest gaining sector this morning is in retail. Basic resources and media are also doing well. Telecoms is the worst performer. That sector losing a little bit of ground this morning. Matt, you've got some breaking news.
Yeah, we've got the SNB maintaining its policy rate at negative 75 basis points. So the Swiss National Bank coming out and holding at negative 75 basis points. It says it's remains willing to intervene more strongly in the FX market. This is something that we've heard from the SNB a lot recently. It also says that the franc is highly valued. So a little bit of jawboning there, but it is maintaining its policy rate, so no change.
Okay, I'll have to cancel order to buy euro. Moved too fast, as you can see, too far. Let's wait for another time.
Over the other major obstacles to a trade agreement, officials are cautiously optimistic a deal could be reached within days, but are still warning large differences remain and talks could fall apart. The EU is pushing to expedite the approval process for the COVID-19 vaccine from Pfizer and BioNTech. Sources tell Bloomberg the move could enable a rollout on the continent before Christmas. If the vaccine wins the backing of regulators on Monday, the Commission could sign off the same day, with the first shots being shipped on Wednesday. Congressional leaders are still haggling over the final details of a nearly $900 billion coronavirus aid plan. Sources tell us it includes $600 checks for Americans and an extra $300 a week in unemployment payments. It also includes roughly $17 billion for airlines. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
Laura, thanks very much. Laura Wright here in London with your important First Word News update. Now let's focus on the future of Europe's single currency. The CFO of the European Stability Mechanism, the ESM, says the share of central bank participation in issuance by the ESM has been rising since 2017. This year, it's set to hit 38%, its highest level ever. Joining us now is Kalin Anev-Jansa, the CFO of the ESM, the European Stability Mechanism. Kalin, good to speak to you. So how much do you rely on central banks to allocate towards your debt, and what explains this?
Okay, new opportunity came to buy Swiss franc, and see, I'm waiting now. It's too late. Broker didn't let me buy it. Let's see what's going to happen with Swiss franc. You know what? I think I'm going to sell short Swiss franc because it decided to move lower, and my indicator tells me that basically that's probably will be better time to sell short. Okay, let's wait for the short signal that will let me know what I have to do with this pair. Again, it's moving fast and moved again so quickly too far. Okay, I'm placing an order to sell short Swiss franc. Price I'm looking 0.88365. Just right here. Okay?
Banks have come back and they seem to be expressing an interest, or they have expressed an interest in your debt then, Calin. How does that evolve, or how does the demand picture for your debt evolve when we're going to see further issuance from a new supranational player, if you like? The European Commission is going to be issuing on behalf of the EU, the Recovery Fund. That's what we're discussing here. How is your debt going to rub alongside their debt? How are they going to play together?
So what I see that global central banks look at is there more euro coming up? So in 2020, we saw 100 billion more issued in SSAs, so supranational, 370 billion issued more by European governments. So they didn't buy only relatively more, but they also in absolute terms bought more. So if you look at global central banks, they bought twice as much in European governments this year than they did in 2019. Now, for 2021, we expect a rise of issuance from the European Commission, as you mentioned, but also some of the European governments. So I actually expect this trend to continue. So the additional supply actually creates additional demand.
What's the demand like on the long end? How hungry are investors for duration, Calin?
So if I look at central banks, they still have their sweet spot between 3 to 7 years. Some of them started buying a bit longer, beyond 10 years, but they don't like too long end issuances. On the long end, the demand remains mainly with insurance companies. Because of Solvency II, they try to match their asset and liability, so they're the largest group, and pension funds. But the long end is still popular because it gives you positive yield, which you don't get on the shorter end of the curve.
So we are going to see a lot of issuance from Europe to pay for all kinds of things to do with the pandemic and the Recovery Fund and all that green investment, Calin. That's going to be a theme of 2021 and beyond. You say that increased supply actually drives demand. Do you have conversations, though, with investors? Are there those out there that are nervous about whether it's going to, what all of this debt issuance is going to lead to in the end?
I heard only positive surprises. So yesterday I spoke to the Japanese investors. So I did a virtual roadshow to Tokyo, and they were extremely positive about Europe. They were really surprised that how fast we moved in this crisis compared to the previous crisis. We were slower to act. And they said that the more euro comes out, well, they will probably rebalance some of their portfolios from dollar to euro, which is positive for us as a European issuer.
I wonder how you think.
Okay, short position opened on Swiss franc and 0.88365.
Due to monetary policy, financing costs have actually gone down in certain parts of Europe and actually across the world, even in the US. So the repayment capacity to debt has become easier. And I see that trend continuing in 2021. We also have seen spreads tighten. For example, the Italy versus Bund spread is tighter than it was the beginning of last year. So I think 2021 will be, in that sense, quite easy for markets. And I'm quite optimistic about next year.
Okay, Calin, good to speak to you. Thanks very much for joining us once again. Calin Anaviansa, the European Stability Mechanism's CFO. Up next on the programme, Germany grapples with the coronavirus amid a steep surge in cases. We have that story for you next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. Right now, we are 42 minutes into the trading day, and we're looking at gains across European benchmark indexes. The DAX putting up the biggest gains, up more than 1%, even though Germany has recorded the most new coronavirus cases since the start of the pandemic. The news comes one day after the government imposed an even harder lockdown on Europe's largest economy. The Chancellor, Angela Merkel, warned that tough times lay ahead. Joining us now to talk more about that is Jörg Kramer. He is the chief economist at Commerzbank. Jörg, great to have you on the program. Really glad you could join us. I saw a note of yours, I think yesterday or the day before, where you said this harder lockdown could hit the economy, hit GDP by 4% a day. How concerned are you?
Well, I have no reason to change this statement because unlike before, not only restaurants and pubs are closed, but also all non-food retailers. And this makes a big difference. And therefore, my calculation is that on a daily basis, value added goes down by 4%. And we have to assume that the entire first quarter is affected by the lockdown. And therefore, my forecast is we are heading for a recession. That means negative growth, not only in the fourth quarter, but most likely also in the first quarter of next year. Therefore, a recession.
Jörg, you previously said that Germany urgently needs alternatives to mere closures. How are German businesses coping with selling online or pivoting to selling online? If you think about how that is doing as a theme versus other parts of Europe, is that going to be something that will show up in the economics?
Yeah, absolutely. That means that we have a lot of statistics showing that the consumers go online, but do not expect that this thus will prevent a recession in Germany. Also, the manufacturing sector, they are fine with Corona. They learned how to deal with Corona. But nevertheless, we have a hard lockdown. And from an analysis of GDP components, it's quite clear that we are likely to see a decline in GDP, despite the good performance of manufacturing, despite strong online activity in retail sales.
As you know, Jörg, I spent some years in Tübingen University. The biotech company CureVac is also based there, and the university city has had some innovative approaches to stopping the spread or slowing the spread of the coronavirus. Can Merkel learn lessons from Tübingen? Can the Bund learn lessons from Tübingen? Or is it more difficult to put these kinds of measures into effect on such a large scale?
Yeah, I think the government should learn from Tübingen, but I'm not sure whether they will do in the end, because the government tends to rely only on a strategy of a mere lockdown. But the city of Tübingen shows that there are alternatives. For example, widespread testing for the elderly, for example, regarding corona tests, or more effective Corona apps, for example, would also be a solution, or creating special shopping times for the elderly. That means there are a lot of other measures beyond a mere lockdown, but unfortunately the government has not learned a lot from Tübingen, I have to say. Therefore, I'm more pessimistic as the fourth quarter and the first quarter of this year is concerned.
As an economist, and looking as you do globally across Europe, Jörg, how do you look at governments' policies and projects to help parts of the economy? Some countries have taken a very sector-by-sector approach and said we'll support those sectors that have been most beaten up, and others have said we'll support any part of the economy. How do they compare from an economics perspective? How do those strategies rub up against each other?
Yeah, the strategy is not bad, because they all more or less rely on general support for those who are negatively affected. For example, in Germany, we made good experience with short-time working support. because this is good for all the companies negatively affected. But the downside of this strategy is this costs a lot of money, and the government debt to GDP ratios significantly move up. Even in Germany, we will go beyond 80% of GDP. And who will pay back all this debt? And this, of course, puts a lot of pressure on the ECB to continue to buy government bonds. You have to see, since the start of Corona, the net purchases of the ECB in terms of government bonds is roughly as high as the net issuance. It means the ECB entirely finances the budget deficits, and this is likely to continue next year. And this is very difficult, for the ECB to normalize this kind of policy, because due to the high costs to economically fight Corona.
I want to finally ask you, Jörg, about Brexit. There's a lot of talk about the effects a no deal would have on the UK economy, and of course, so many now are optimistic that we will reach a deal over the weekend. But I wonder how the German economy would be affected if no deal were reached. How difficult would it be for the German economy?
Well, first of all, one should not put all the blame on the UK in this discussion, I have to say, because the UK is an old democracy, and if they decide to leave, then this is not only an issue of the UK, but it also raises questions as far as the European Union is concerned. That having said, I have to say that the UK, together with France, China, and the US, they all roughly have 7–8% of our exports go to these countries. Therefore, the UK is important for Germany. And if there is a hard lockdown, this is not yet my main scenario, but in the case we get a hard Brexit, the UK is likely to impose, or will impose, then tariffs in line with the World Trade Organization. I think the majority of goods will be exempted from tariffs, but at least 60 or 40% or so of German exports to the UK will then be subject to tariffs. The tariffs may be in the area of a lower single. I think in the end this is negative, but I think this will not kill the exports of German exports to the UK. This is one negative factor, but not the total dominant one.
Okay, Jörg, thank you very much. Jörg Kramer, Commerzbank's chief economist. Thank you very much for joining us. Thanks for bringing us your thoughts. Up next on the programme, what opportunities come with the vaccine? We'll put that markets question to the Market Live team. Laura Cooper joins us next. This is Bloomberg.
substantial further progress means what it says. It means we'll be looking for employment to be substantially closer to assessments of its maximum level and inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon that we're talking about here. Now, everyone knows how uncertain everyone's macroeconomic forecasts can be, and particularly in this sort of an environment. But nonetheless, it was quite an admission.
Any unwind of these programs, or even stopping them, leaves the Fed and the economy vulnerable. Specifically of concern is the corporate bond purchase program.
They can buy more bonds and they can buy longer maturity bonds, and that would put more downward pressure on long-term interest rates. But that's really not the problem facing the economy right now. The level of interest rates is not holding the economy back.
Those were a series of guests talking about the central bank's decision, as well as the Fed chair himself, Jerome Powell, explaining it. European stocks are climbing this morning as authorities in Washington, outside of the Fed, are said to be looking at actually achieving a stimulus deal. Here on the continent, the European Union is talking about approving a vaccine before Christmas, potentially giving a boost to the region's battered economies. Joining us now is MLive's Laura Cooper to talk more about this. Laura, it seems to me that it hasn't been the virus at all, but the U.S. stimulus package really driving markets. Do you see that as the case here as well?
Well, that certainly does look to be the case, just the fact that we are seeing kind of this confluence of factors all coming together at once. So we have the potential for fiscal aid to finally be agreed upon. We have the Brexit deal potentially coming through. And we add in kind of central banks led by the Fed, really giving the green light to risk assets to rally. That's really underpinning this positive tone that we're seeing. And that's despite kind of this ongoing virus containment challenges. But I think really markets are focused on that vaccine deployment, those positive 2021 prospects, and the fact that we are going to see these highly accommodative conditions persist through at least next year.
Laura, your thoughts on Bitcoin right now? There's been a lot of fuss about it getting over 22,000. I understand it's flirting with 23,000 as we speak, and we've seen some pretty high expectations from some parts of the institutional investments community. What do you think?
Well, it's quite interesting. Just the fact that we've seen Bitcoin surge only 20% this week is quite exceptional. So really, whether this is kind of a question of speculative fervor that this is a bubble that could pop, or whether it has staying power, just given, the fact that ultimately we are seeing this broad debasement of fiat currencies, which has investors seeking real assets. So I think, yes, Bitcoin is quite volatile, but ultimately we are going to see this upward momentum likely be sustained because it is becoming more of a mainstream asset. We are seeing kind of this broadening investment base. So, whether it's 400,000, whether it's, a million, whether it's 30,000, I'm certainly not one to kind of put a point forecast on it, but I think ultimately momentum does indicate that it is going to go higher, even though we can't really necessarily kind of pin, fundamentals to any kind of valuation at this point.
All right, Laura, thanks very much. Laura Cooper there from the Bloomberg MLive team talking about Bitcoin as we watch it right now at $22,921, getting ever closer to 23,000. That's it for the European Open. Stay with Bloomberg Television. Up next, it's surveillance. Anna and I are headed off to radio, so maybe don't stay with Bloomberg Television. Maybe switch over and listen to us on London DAB Digital. This is Bloomberg.
Glass half full, Fed Chair Jay Powell sees the U.S. economy performing strongly in the second half of next year, but promises to keep supporting the economy. Decision day on Threadneedle Street, the Bank of England prepares for its final rate announcements of the year. Policymakers are set to keep stimulus unchanged, with the Brexit deal yet to materialize. And Bitcoin's rally, the cryptocurrency, tops $20,000. Scott Minard says it could be worth $400,000. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacroix here in London. So let's get straight to the markets. A lot going on, of course, with Bitcoin. It was interesting to hear that conversation with Scarlett Fu and Tom Keene on Bitcoin. Mr. Minard saying that this is partly due to scarcity, that he sees it going up to as much as 400,000. I don't think it was a hard prediction, but he said that it could go up to that level, but also because of Fed policy, as he thinks they could start printing money. Now, European stocks are gaining on hope of a vaccine, the dollar slumping. We also look at some of the currencies that, of course, the U.S. labeled currency manipulators. And then overall, the pound actually climbing as officials cautiously predict a Brexit deal within days. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The UK and EU are heading for a final Brexit battle over fishing rights. It's a sign the two sides have largely settled their differences over the other major obstacles to a trade agreement. Officials are cautiously optimistic a deal could be reached within days, but are still warning large differences remain and talks could fall apart. Now, the EU is pushing to expedite the approval process for the COVID-19 vaccine from Pfizer and BioNTech. Sources tell Bloomberg the move could enable a rollout on the continent before Christmas. If the vaccine wins the backing of regulators on Monday, the Commission could sign off the same day, with the first jabs being shipped out on Wednesday. And European car sales have fallen 14% as countries have imposed new restrictions to stem the surge of coronavirus. Apart from a small gain back in September, sales have declined all year and are down 25% over the first 11 months. Electric cars could be one bright spot. Bloomberg Intelligence thinks they will exceed sales of diesel cars for the very first time this quarter. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now, we're just getting some breaking news out of Norges Bank. Extremely interesting to see exactly what they're doing. Norges Bank holding its key rate at 0%. So the key rate is unchanged. Remember, we also had the Bank of England later. We're not expecting much change for the Bank of England as the governor, Andrew Bailey, has his last decision before 2021. 2021 is also Brexit Day. The only thing I would watch out for in monetary policy, and it is monetary policy heavy today, is rumors or talk that the PBOC could go at it alone and start tightening, and that could actually change the trajectory for renminbi going forward. Now, the Fed staying the course on supporting the U.S. economy, promising to maintain its massive asset purchase program until it sees substantial progress in employment and inflation. Speaking after the central bank's last meeting of the year, the chair, the Fed chair, Jay Powell, sounded the most optimistic he's been since the coronavirus crisis actually began.
Substantial further progress means what it says. It means we'll be looking for employment to be substantially closer to assessments of its maximum level and inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon that we're talking about here. Now, everyone knows how uncertain everyone's macroeconomic forecasts can be, and particularly in this sort of an environment. But nonetheless, it was quite an admission.
Any unwind of these programs, or even stopping them, leaves the Fed and the economy vulnerable. Specifically of concern is the corporate bond purchase program.
They can buy more bonds and they can buy longer maturity bonds, and that would put more downward pressure on long-term interest rates. But that's really not the problem facing the economy right now. The level of interest rates is not holding the economy back.
Meanwhile, on the fiscal front, congressional leaders are rushing to finalize the latest stimulus deal in time to attach it to a crucial government spending legislation, which they hope will pass by the end of the week. Well, joining us today to talk monetary policy is Paul Donovan. He's Global Chief Economist at UBS Wealth Management. Paul is also the author of the newly minted book, Profit and Prejudice, The Ludities of the Fourth Industrial Revolution, which came out earlier this year. And I have to say, Paul, is an absolute fantastic and important read. We'll get onto that in a second. But Paul, when you look at some of the concerns out there and what we heard, of course, from the Fed chair yesterday, Jay Powell, it was a very difficult task that he was trying to do. Did he achieve the right balance in saying we're here, we're supporting, but we're not doing anything yet because it'll get better?
Yes, I think by and large, he did get the right balance. I mean, the message from the Fed yesterday essentially was we're going to continue to provide liquidity as long as the economy needs liquidity. And that's frankly all a central bank can do in the situation. As the Fed was also making clear, this is not a central bank problem. This is a fiscal problem. The US government took your money away from you, effectively, through locking down the economy. It's down to the US government to give it back. It's not down to the Federal Reserve. But I think the other very important point to take away, a lot of people have been worried that central banks are printing money, this will create inflation. Well, it doesn't create inflation. Printing too much money is what creates inflation. And implicit in Fed Chair Powell's remarks is acknowledgement that they won't print too much money, that they will be guided by the liquidity needs of the economy and they will match those needs. And that, I think, is a very reassuring signal.
Paul, what kind of recovery are you expecting? So there are vaccines that are starting to be rolled out. Are we going to see a deep and sustained recovery as soon as we achieve herd immunity, and how quickly can we do that?
So I think we've got a fascinating situation from an economic point of view. I mean, this is a really exciting time because we're seeing a very unusual cyclical recovery for large parts of the economy and very rapid cyclical recovery for parts of the economy. Then we've got sectors of the economy that need to wait for the vaccine. Travel, entertainment, leisure needs the vaccine in place to get normalization. And then we've got the accelerated structural changes of the economy, which in the long term are good, but create a lot of friction, a lot of distortions and problems in the short term. So we've got these three forces all coming together. I think the standard cyclical recovery is going to be very good. I think the vaccine is essential for a key part of the economy to get people back into airplanes and restaurants and so on and so forth. But then we're still going to be left with the sectors of the economy that are in, frankly, terminal decline as a result of structural change. And that's where the real policy challenge is going to be, particularly later next year, I think.
Paul, there's like a million questions on different stories that I need to ask you. So let's switch it up to, the Swiss franc, or the Swiss National Bank actually being labeled a currency manipulator. So what they've done so far has been actually blessed also by the IMF. Is there anything that they could have done not to get that label, and how problematic is that label for Switzerland?
So I think the issue here, of course, is that you've got this very, very rigid formula for assessing what is a currency manipulator. And it doesn't involve a great deal of economics, frankly. I mean, it's all fairly ridiculous stuff. So I don't think the SNB could have done anything. I mean, you can try and game the system, but if you're setting certain parameters which can't be moved, then certain circumstances will mean you can't avoid those parameters. The Swiss National Bank, of course, has been presiding over an appreciating Swiss franc. So it's not like they're dramatically reducing the value of the franc in order to gain huge competitive advantage against the United States. And frankly, I'm not sure that the United States should be quaking in its boots at the competitive challenge that an economy the size of Switzerland is offering. So I don't think that there's a great deal else that the SNB could have done in this situation. And I think we'll have to see what the incoming administration's approach is going to be. Of course, with former Fed Chair Yellen being nominated Treasury Secretary, we do have a proper economist coming in to run the Treasury. And her view may be perhaps a little more grounded in economic realism.
So are you expecting less of a hard line against Switzerland from Treasury under Biden?
I would be surprised if they were going to continue to be so aggressive. And of course, circumstances will change as we move out of the pandemic. The safe haven bid for the Swiss franc, I think, is likely to fade away. That will obviously be something which removes pressure from the SNB to intervene. You'll see shifts in demand patterns. The US trade position is likely to adjust as its own domestic production comes back from the current shutdowns. So there's lots of things that are going on here, which I think will change circumstances relatively quickly in the early part of next year.
Paul, thanks so much. Paul Donovan there from UBS Wealth Management. He stays with us, and we'll talk about Bank of England, we'll talk about PBOC, and I hope we also get to his book shortly. Coming up later this hour, we also speak with the Société Générale chairman. He's Lorenzo Binismaghi. We talk about the state of European banking and his outlook.
Ladies and gentlemen, I am going to place stop on profit for Swiss franc at 0.88345. Just right here. Okay?
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Vladimir Putin there, Russia's president, in his annual end-of-year news conference, expected to last roughly 4 hours today. This is an annual event. You can see they're a bit more socially distanced, the reporters attending, and appropriately masked. Now, he will have the same format as most of his speaking engagements this year, which is a remote one due to the pandemic. So the president...
Position closed on Swiss franc, US dollar against Swiss franc. Got £200.
Joe Biden, the new administration, and maybe Russia's handling of the coronavirus as new cases have surpassed, I believe, 25,000 a day. Now let's focus back also on central banks and the Bank of England, due to make its final policy decision of the year today. The central bank is expected to keep policy unchanged for now. Well, still with us, Paul Donovan from UBS Wealth Management. Paul, when you look at Brexit, what does it mean for the possibility of negative rates in the UK? So first of all, it's actually unclear whether we have a deal or not. How much damage or how much disruption will we see come January if there's no deal?
Well, I mean, we do think we will get to a deal. We're now at the stage where Prime Minister Johnson and President Macron are slapping each other around the face with wet fish. I mean, we're descending into farce, and I think it's unlikely that fishing is going to stop a deal in the end. But if for whatever reason we do get a no-deal situation, clearly there will be a lot of disruption. But there's going to be a lot of disruption one way or the other. The challenge for the medium term is we then have to focus on, okay, well, if we don't have a deal on the 1st of January, when do we get a deal? Because Brexit doesn't end. Brexit goes on and on forever. And so we're just starting a process of another round of negotiations with or without a deal. In either case, there is a limit to what the central bank can do, because the sort of disruption that we're talking about with a deal, without a deal, it's not something that's about the cost of credit. It's not something that's about liquidity in the system. Bank of England Governor Bailey can hardly go down to Dover and start directing traffic. It's something the government has to solve. Central banks don't really have that big a role in this sort of situation, I don't think.
I mean, yeah, actually, the governor's probably so hands-on, he'd, probably do that. When you look at, what it means for pound, Paul, are we underestimating the kind of the whipsaw of pound? Are we underestimating the longer-term consequences of what it does to debt and pound dynamics?
So I think the sterling is starting to reflect more and more the prospects of a deal. The markets are basically looking for this. You would obviously see a lot more weakness in sterling in the event of no deal. Clearly, the movements in sterling have a certain amount of impact in the short term. Not a huge amount. I mean, we don't tend to get a huge amount of import price inflation in the UK. Things like food prices and so on tend to be slightly independent of sterling. Over the longer term, the further we move away from Brexit and the more the structural changes of the economy, the global economy, start to come through, the less relevant this is all going to be. I mean, if we're talking on a sort of a 5 to 10 year view, it's going to be other factors like labour flexibility and so on, which are going to be driving the relative position of the UK, rather than argument about fishing quotas and small amounts of tariff.
I want to talk to you about Bitcoin, but before we get to that, Paul, what does Euro do from here? So I'm also looking at a graph saying, investors are finishing the year at the most bullish towards the Euro in more than 7 years. When is this a problem for ECB?
Well, I mean, the euro is still undervalued as a currency. So in an absolute sense, this is hardly a strong currency choking off recovery in the Eurozone. And of course, a lot of Eurozone trade is within the Eurozone. So the euro is neutral for a lot of the transactions that go on between the different countries of the euro area. The ECB has always signalled that it's more focused on the speed of the currency moves. So if you get a very sudden move in the currency, that can be quite disruptive to businesses and cause some short-term problems. So I think that the ECB should be more focused on the speed. The level at these levels is absolutely not a problem. I mean, the euro has been undervalued for quite some time. It shouldn't be a problem that it's gradually drifting back in the direction of fair value.
Paul, Bitcoin surging to record highs again. I think it's at 23,000 right now. Scott Minerd of Guggenheim Investments thinks its fair value still has a way to go. Here he is.
We made the decision to start allocating toward Bitcoin when Bitcoin was at 10,000. It's a little more challenging with the current price closer to 20,000. Amazing, over a very short period of time, how big of a run-up we've had. But having said that, our fundamental work shows that Bitcoin should be worth about $400,000.
Paul, what's your take on Bitcoin?
Well, it's not a currency, it's not an asset. People perhaps are reluctant to go out to casinos and gamble, so they're finding another outlet.
Which means what, that 400,000 is crazy, or it could go to 400,000, but you just don't want to be invested in? What are your clients asking of you regarding Bitcoin?
Well, not very much, to be perfectly honest. I mean, a couple of years ago, there was a flurry of interest, and that's largely died away. I mean, the thing clearly isn't a currency. It's not a stable store of value. You can't reduce the supply, which means it's periodically subject to bouts of for want of a better term, hyperinflation. You can't pay taxes in Bitcoin anywhere in the world. That's the single most important use of currency. So it's not a currency. It's not an asset. It doesn't generate a future income stream, and having it in your portfolio doesn't achieve diversification of lower risk. Bitcoin just piles on the volatility of your portfolio. It doesn't reduce it. So it's very difficult to see why serious investors will actually look on this as anything other than speculation. And we have been here in the past. I mean, we remember the dot-com bubble or the Beanie Baby bubble. I mean, you get these periods coming through. It's magnified, I think, by a narrative over social media and so on and so forth. But this isn't a currency, and I don't think it's something which has a particularly good role in terms of an asset portfolio, because it's certainly not going to help your volatility.
Paul, I also wanted to get your take on a story, from the G30, came out with a report, and Rajan and, of course, Mario Draghi saying that the solvency crisis is probably the biggest concern we should have right now. Do you worry about it, and how can we avert it?
So I think in terms of corporate solvency, we do have challenges here because we've got an extraordinarily unusual set of circumstances created by government action, and companies should not suffer as a result of that. So if you're a viable business, if you're a solvent business, you need to be kept going. But at the same time, we're seeing structural change in the global economy, which means that some business models that were perfectly viable 5 years ago are not going to be viable in the next 5 years. And so the trick is going to be distinguishing between these two different groups about keeping solvent companies that are temporarily suffering but have perfectly viable business models. Those have got to be kept alive. But if you are a business that doesn't really have a future, if you're a business that is having its model turned upside down by structural change, keeping that business alive is going to be very economically damaging. And you need to be instead focusing on how to transition workers out of that business and into parts of the economy which have a future. So this is going to be a really difficult exercise over the next few years. But it always is. Whenever we have these structural upheavals, this is always the challenge that we face.
Thank you so much, Paul Donovan. They're a global chief economist at UBS Wealth Management, and of course, a newly minted author. We'll have to get you back to talk about prejudice and economics. Coming up, Revved Up, the chief executive of Bugatti and Lamborghini strikes an optimistic note for the second half of 2021. More from that exclusive conversation next. This is Bloomberg.
I'm placing a new order to sell short euro. Price I'm looking 122.39. No, actually 122.33. 122.33.
This is Bloomberg Surveillance. This is where Bitcoin is. I have to say our interview, or the interview that Tom Keene and Scarlett Fu did yesterday on Bitcoin with Scott Minerd of Guggenheim, really sent shockwaves across a lot of market participants. So yesterday it was, I think, just at 21,000. Then it went to 22,000. Now it's hitting 23,000. And in between those key psychological levels, Scott Minerd of Guggenheim said that actually he could see it going up to 400,000. I think he was talking about possible scarcity, and he was talking about Fed policy that he believes won't stop before printing money. Coming up, the ECB lifts its ban on dividends, and we talk to the chairman of Société Générale. This is Bloomberg.
Order to sell removed. As you can see, it moved really fast. High didn't reach the level. Okay.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Breaking news out of France. According to the Élysée Palace, the French President Emmanuel Macron has coronavirus. So he has tested positive for COVID-19. I imagine, like many leaders, of course, they get tested periodically, if not daily, or at least weekly. Now, this, of course, is in the context of infections rising in France. It was only 2 days ago that the lockdown was lifted, but that Monsieur Macron had decided that restaurants and bars would be closed in France during the Christmas period. Again, just a couple of seconds ago, we heard heard from the Élysée Palace that the French president, Emmanuel Macron, has tested positive for COVID-19. I imagine that in the next 15 to 20 minutes, then we'll exactly find out and see which other world leaders, if any, he met. There was a Eurogroup meeting, but with finance ministers, actually leaders last week in Brussels. So we'll see if he had been tested before then. So I guess now it's a matter of containment. We assume that the president will self-isolate, but we also need to find out exactly who he's been meeting and see what that means for a possible transfer of power. We're not there yet at all. It's speculation about what will happen, but of course there are always contingency plans in place for things like this. Emmanuel Macron positive for COVID-19. I'll bring you any breaking news as we have it when it crosses the Bloomberg terminal on this developing story. Now let's get straight to the Bloomberg First Word News. Here in London with me is Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Germany has recorded the most new coronavirus cases since the pandemic began. It comes just a day after the government imposed a hard lockdown on the country, and Chancellor Angela Merkel is hinting the restrictions may last longer than originally planned. To support the economy through the pandemic, Germany is selling a record amount of debt next year, over 470 billion euros. The Federal Reserve is pledging to keep supporting the economy well into the future. It's maintaining its massive asset purchase program until it sees progress on employment and prices. Speaking at yesterday's policy meeting, Chairman Jerome Powell said he expects the economy to bounce back in the second half of 2021, but is warning the next few months will indeed be challenging. And the UK and EU are heading for a final Brexit battle over fishing rights. It's a sign the two sides have largely settled their differences over the other major obstacles to a trade agreement. Officials are cautiously optimistic a deal could be reached within days, but are still warning large differences do remain and talks could still fall apart. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
And thank you so much. Now, European banks underperformed yesterday after the ECB lifted its ban on dividends but imposed strict limits on payout levels.
We are enabling banks to pay within a certain threshold, so within a so-called guardrail, and this is a change with respect to where we have been up to today. So it's an important opening, which has been broadly supported in the supervisory board, and which recognize that we are moving slowly back to normal, although we are not in the normality yet.
Now, the move underscores the challenges for banks as the region enters a second wave of lockdowns. The sector has lagged behind the broader market this year after lenders repeatedly warned that being unable to return cash to investors risks cutting them off from capital markets. Now, one of the names demanding a return of payouts was Société Générale Chairman Lorenzo Binismaghi, who joins us now. Mr. Binismaghi, thank you for joining us on Surveillance. Finally, a lift, but a lift on dividends with conditions. Are the conditions too stringent?
Well, it's the first step in the right direction. It's not exactly what other supervisors have done. It's not clear why there is a different treatment, but it's slowly going back to normality, which will allow banks to remunerate their investors like any other sector which has been affected by this crisis.
Mr. Binismaghi, I want to come back to dividends, but actually in the last 5 minutes, and I think you heard me because we were just discussing it, the French president, Emmanuel Macron, has tested positive for COVID-19. Of course, our thoughts go with the president, and then we'll see exactly who he's seen and what he's seen. What are your thoughts on, COVID right now? We're weeks or months away from, vaccinations reaching a critical mass of the population. What does it mean for the economy? Are people relaxing too much? Is there danger of a third wave, or will 2021 just get better?
Well, I mean, it's difficult to anticipate. What we know is that in the second half of the year, certainly the economy will get better. There is light at the end of the tunnel. There are a few months to transition towards this return to more normal times. And we have to organize this in a way that is not too bumpy, But it's clear that if you shut down everything, then when you open, people want to get out. And so there is a risk of stop and go, if I can say so. That may hurt the economy. But the important thing is that we now are organizing ourselves for getting back to normality within a few months. And that's the key issue for the economy.
Okay, I know, Mr. Binismaghi, I'm kind of jumping around to deal with breaking news, but if you go back to the dividends and the conditions imposed, do you believe that European banks, French banks, such as yours, are at disadvantage with UK banks, US banks, and Swiss banks because of the dividend policy?
Well, I mean, the supervisor has not given reasons why the European rules, the continental European rules, are different from the UK or Swiss or other rules. So banks are I think, have addressed this crisis from a good starting point. They have a lot of capital compared to the past. They are looking very carefully at all the impacts of the crisis. The impact of the interventions by the policy authorities, in particular the guarantees that have been provided to borrowers. So banks put the capital at use if this capital is remunerated. So if supervisors want the banks to support the economy and put capital at work, they have to allow banks to distribute dividends. If they will not allow banks to distribute dividends, this will in the end work against a sharper and quicker recovery.
But what are investors telling you about dividend policy?
I think investors are waiting and seeing. They understand that this is a first step. They expect ECB to adjust to the other supervisors within the next few months, so that there is really no reason why Europe should treat investors differently depending on where they put their money, either in banks in Europe or outside Europe. So I think it's a transition. It's an issue of time. I expect everything to be leveled within a few months.
Do you expect Société Générale to pay dividends in the first 9 months of 2021?
Well, I mean, we have a shareholder meeting in May, and the board will make a proposal to the shareholders consistent with the indications of the ECB. And we will see whether we'll have a second meeting during the second half of the year, when we may pay the rest that is in line with our dividend policy.
Talk to me a little bit about the banking union. So it does seem that we're doing progress. How does, if slow progress, and it has been slow for quite some time, how does Angela Merkel stepping down as chancellor next year affect that?
Well, we have had we made a further step forward, I think, with the adoption of the ESM reform, which allows the ESM to be used as a backstop. Incidentally, I would say that banks are continuing to contribute to the Single Resolution Fund even during the crisis, and actually they are paying even more because the share of their contribution depends on the size of the balance sheet, and the size of the balance sheet is being affected by the very expansionary monetary policy. So the various pillars of the banking union are continuing to be built. I think we are missing a couple of key decisions. One is on the single insurance scheme for depositors, and the other issue is to eliminate national discretions, because there is still a lot of room for national regulators to implement the European single rule book in a different way. We have to move in that direction. And the other very important issue is the capital market union. Now that we will have Brexit, that London will be outside the European Union, we have to make sure that the European capital market is strengthened, and this will be an important contribution also for banks and for the profitability of banks in the continent.
Talking about profitability, do you think the ban on dividend has had a long-lasting impact on how investors view banks, view European banks?
I hope not. I mean, if this was the case, then the supervisor should ask itself what is the impact of their own decisions. I don't think that the supervisor has an interest in having investors look at European banks differently than UK banks or Swiss banks. So I assume that this is a very temporary and exceptional situation that the supervisor will clarify. And I think they have said that this is absolutely exceptional and that we will go back to the normal rules concerning distributing the possibility to distribute dividend, which is basically the amount of capital that one has. I think the authorities will have a stress test in the coming months. So I don't expect that there is a long-lasting impact from this very exceptional situation. And if there is, I hope supervisors will clarify this very quickly.
Okay, thank you so much, Lorenzo Binismaghi there, Chairman of Societe Generale, stays with us. We'll talk about his outlook for 2021. And we also have that breaking news in the last 6 minutes. We found out that Emmanuel Macron, the French president, has tested positive for COVID-19. This was a statement from the Élysée Palace, and the French president will self-isolate during 7 days. According to the Élysée, he will continue to work. It's unclear exactly if he has any symptoms, because a lot of leaders get tested periodically, and I imagine the next 15 or 20 minutes or so we'll also have a breakdown of who he's seen and who else in the government needs to self-isolate. We'll have plenty more on this developing story. Emmanuel Macron testing positive for COVID-19. This is Bloomberg. Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, big news over the last 12 minutes or so. Emmanuel Macron, the French president, has COVID-19. So he tested positive. We understand it could be earlier this morning. We also understand that he will self-isolate for 7 days, but will continue working. What's interesting is that we hear from the, of course, statement of the Élysée Palace that the president took a test as soon as the first symptoms appeared. Now, we don't know exactly what symptoms Macron has has experienced, but he is self-isolating now for 7 days and will continue to work and take care of his activities at a distance. We'll have a lot more on Bitcoin. We'll have a lot more on, of course, the markets. The market looking at Jay Powell. They're looking at the Bank of England later, and then they're looking at some news out of the PBOC that they could actually tighten and go at it alone. We'll have plenty more on market stories. That's coming up shortly, and this is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Now let's get more on this breaking news. And the Élysée Palace, his residency, says the French President Emmanuel Macron has tested positive for COVID-19. Let's get the latest from Paris with Bloomberg's Anya Nussbaum. Anya, what do we actually know? Did the president experience symptoms?
Hi, so we don't know much yet. We know that the president did experience mild symptoms, according to an official in the Élysée Palace, and he got tested as soon as he experienced them. He's now going to self-isolate for at least a week and probably get tested a second time.
Do we know who he's seen in the last couple of days? How wide will the self-isolation be? Has he had any ministers' meetings? Is his cabinet also at risk?
Yes, there was a recent cabinet meeting. Yesterday, he had a working lunch with the Portuguese Prime Minister, Mr. Costa. Last weekend, I actually saw him on Saturday and spoke to him during a summit about green finance. But he has been respecting social distancing measures. He's been wearing masks. When I saw him, we were, we kept our social distance and we were both wearing masks. And he has been doing so with most of his team members. We're expecting a second communication anytime soon from the Élysée, detailing who else might be forced to self-isolate and test because they've been in touch with the president.
Anya, thank you so much for the update. Anya Nussbaum, we are getting a couple of updates also. We understand that there was a working lunch with the Portuguese Prime Minister on Wednesday. And of course, everybody knows that France has switched to a strict lockdown to a curfew this week. Now, let's go back to banking. And with just a few weeks left of an unprecedented year, what could 2021 actually hold? Well, still with us is Lorenzo Binismaghi, Chairman of Société Générale. Lorenzo Binismaghi, we were talking a bit before about dividends and some of the things that the ECB was putting in place. Now, they were also pretty sanguine about the number of companies that could go bankrupt in 2021, which people could underestimate. What are your thoughts on that? Are we underestimating the potential bloodbath for companies in the next 6 months?
Well, I mean, there was also a recent G30 report on the possible impact of the crisis on bankruptcies, and calling policymakers to be ready, because it's clearly an environment with high uncertainty. How many companies will be able to go through this crisis only with the need of liquidity assistance, and which ones will have to address solvency issues, and how will they address, and how is the regulation going to allow them to clean their balance sheet and to restructure and start again, and which ones will not be able to do that. So I think it's normal that policymakers prepare themselves for outcomes that may be worse than expected. This doesn't mean that they have to change dramatically their policy tools and instruments, but they have to think about it. So I'm not surprised that they are calling all parties to be ready to act even more. So far, the interventions have been mainly to liquidity and helping banks to make sure that the liquidity was getting to companies. But at the end, some may need more capital, and this is the capital market which will need to get in at some point.
Does it mean that banks will have to set aside more provisions once the measures of support actually stop? And does it mean, do you think Société Générale will have to do that, or have you already provisioned for that?
No, actually, we are doing that. And we have also very stringent rules, accounting rules called IFRS, which are actually pushing banks to do to upfront provisions at the start. So this year we will have a lot more provisions than last year. So it looks like I wouldn't say everything is under control, but I would say the instruments to address a crisis like this one have been put in place, and we are doing our part as banks.
Mr. Binismaghi, when you look at consolidation amongst the banking sector in Europe, Société Générale was recently portrayed as a possible prey. What's your reaction to that?
Well, I don't see that in the picture. I think banks right now are addressing issues related to the restructuring of the banking system. This crisis will lead banks to face lower interest rates for a long period of time. So we just launched a major initiative to consolidate and merge our brands. We are restructuring our investment banking part. Other banks are doing similar things. I think consolidation has been put forward for 2 or 3 years. When this will happen, I think Société Générale will be a protagonist, not a prey.
When you look at Brexit, how different will EU financial centers look like in 12 months from now? And do you worry that it's the US that will actually win business?
Well, unfortunately, part of the business has been moved to the US, and this is not good for Europe. Part of the business has moved to continental Europe. Paris has benefited a lot from this. We will see more probably over the coming months, and it will depend in the end how the collaboration between the authorities will work after Brexit. There is a lot of dependence on the concept of equivalence and cooperation. It will depend on the authorities on both sides of the channel, and hopefully there will be convergence, and this convergence will avoid making huge shifts and creating problems of stability in the working of the financial system.
How significant do you see the hundreds of billions of assets being transferred from the UK to the EU?
Well, markets have coped relatively well, I would say, so far. I would expect that this trend will continue for some time, and we will see some stabilization in the course of 2021, on the assumption that nothing else will change. But if, as I said earlier, we will see tensions between regulators or divergences, then we could have additional flow to the continent, which would not be very helpful, I think, for the City of London.
Thank you so much, Mr. Lorenzo Binismaghi, there, the chairman of Societe Generale, joining us for a very wide-ranging interview. Now, we're also just on top of that developing story. Emmanuel Macron, the French president, having tested for COVID-19, is positive. The symptoms, we understand, are mild. Of course, our reporters in Paris continuously calling his residency, the Élysée Palace, to try and get more of an update on the president's state. The president was due to travel to Lebanon next week. He did also meet with the Portuguese Prime Minister Antonio Costa for a working lunch on Wednesday. Macron tested positive after showing mild symptoms of the disease, and he will now self-isolate for 7 days and continue to work. That's according to the Élysée Palace. We'll have plenty more on this shortly. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
half full. Fed Chair Jay Powell sees the U.S. economy performing strongly in the second half of next year, but promises to keep supporting the economy. Decision day on Threadneedle Street. The Bank of England prepares for its final rate announcement of the year. Policymakers are set to keep stimulus unchanged, with a Brexit deal yet to materialize. And Bitcoin's rally, the cryptocurrency, tops $20,000. Scott Minard, in conversation with Tontine, says it should be worth, or could be worth, $400,000. Well, good morning, everyone, and welcome to Bloomberg Surveillance. Tom and Francine from London and New York. Tom, in the last 20 minutes, we had huge news out of France. Without a doubt, the story of the day, Emmanuel Macron, the French president, actually testing positive for COVID-19. Now, yesterday, he had a working lunch with the Prime Minister of Portugal. We understand that he also had various meetings with his cabinet, but at all times, the president, or almost all times, he is wearing a mask. That's by people that were surrounding him. He has mild symptoms. He will self-isolate for 7 days and continue working from self-isolation.
You know, 32 years younger than President Trump, and age does make a difference in the virus, but there's an article actually in the Zeitgeist to Francine in the United States about the real harm to younger people with this virus. It's always serious, but certainly it really underscores the news that, you know, we're not talking enough about, because we've got all this other news flow going on. But I'll tell you, you look at the acclaimed virus update on the Bloomberg terminal, and this thing gets worse and worse. I was modeling out, when do we get to 4,000 deaths a day in the United States? And it's out there somewhere. The news is grim.
It's very grim, Tom, and you're absolutely right. I was actually reading a lot of news overnight about how, you're right, if you're over 65, you're more at risk, but the category of 30 to 45, which President Macron is in, is also, you know, the numbers of cases and numbers of people ending up in hospital is quite high. Of course, we're not there yet with the President of France, and we wish him well and a speedy recovery, but again, we should take this virus seriously, no matter your age. Now let's get straight to the Bloomberg. First word news, here's Karina Mitchell. Hi, Karina.
Francine, thank you. Congressional leaders are close to an agreement on an almost $900 billion coronavirus aid package. The plan includes $600 payments for individual and $300 per week in supplemental unemployment insurance payments and aid for small business. What's not included, aid to state and local governments and lawsuit liability protection. Meanwhile, Federal Reserve Chair Jay Powell sees light at the end of the tunnel. After the Fed's final policymaking meeting of the year, Powell sounded the most optimistic he's been since the coronavirus pandemic began. At the same time, he pledged that the central bank will keep providing the economy with plenty of support well into the future. And France's President Emmanuel Macron has tested positive for COVID-19. The presidential palace says he took a test as soon as symptoms appeared, but it didn't specify what those symptoms were. Macron will self-isolate for a week and will continue to work. And the UK and the European Union are heading for a final battle over fishing rights. That's apparently the one major issue standing in the way of a post-Brexit trade deal. Officials are cautiously predicting an agreement within days. The focus on fish is a sign the two sides have largely settled their differences over another major issue, a level playing field for business. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Tom.
Karina, thanks so much. I'm going to do a quick data check here. We deserve to do a longer one because Chairman Powell simply moved markets. Equities continue to lift. We're going to be talking about record highs here, there, and everywhere today. Small cap, mid cap doing well. NASDAQ 100 vaults forward, and the composite up a solid 60 points. SPX up 20 points on futures. The VIX came in off Chairman Powell's press conference. No question about that, breaking 23 to a 22, and we now enjoy a 21.97 on the VIX. In the yield space, ever greater negative yields on that inflation adjusted real yield that we look at, a negative 1.03% is really stunning. And in the foreign exchange market, Francine, we're going to get to this with Jane Foley in a moment. Just, it's extraordinary what we're seeing in movement of different currency pairs.
Yeah, so I would look, of course, at the currency manipulators, and there's some interesting facts on what actually Swiss franc did and whether longer term it has an impact on a country like Switzerland. I know we're speaking to Thomas Jordan, president of the SNB, shortly. Now, European stocks overall climbing. Authorities said to be expediting the rollout of a COVID vaccine for Christmas here in Europe. Then watch out for a pound climbing. Again, officials cautiously predicted a Brexit deal within days, but actually I don't have much more of an update than we did yesterday. And then Bitcoin, Tom, what a great interview you did with Scott Minerd yesterday. It was really fun to watch. I did watch your Fed special. There you go. If that's not love, I don't know what is right before Christmas. And it briefly touched 23,000, Tom.
It's amazing. The Francine Lacroix would give up Liverpool and the Tottenham, crushing defeat yesterday to watch Scarlett Fu and Caroline Hyde get it done. It was great.
Yeah, with the kids who wanted to watch the Fulham game, Tom, because the Premier League, is not only the big guys. There was also Fulham, my local club playing.
Your local club playing. It's called a derby or a derby or something like that. The Minerd interview was a big deal, Francine, and all the credit to Scarlett Fu, who jump-started that discussion on Bitcoin. I'm not going to opine on Bitcoin. I think a lot of people know how I feel. I'm more in the Noro Rubini camp, who's really wound up about Bitcoin. But guess what? This is a moment for the people that have been the strident bulls of Bitcoin.
Yeah, Paul Donovan was also pretty wound up about Bitcoin. Now, in its final meeting of the year, Tom, with that great Fed special, the Fed, of course, strengthening its commitment to support the U.S. economy, cautiously optimistic. The chair, Jay Powell, warned the next several months will be challenging.
The substantial reopening of the economy led to a rapid rebound in activity, and real GDP rose at an annual rate of 33% in the third quarter. In recent months, however, the pace of improvement has moderated. A full economic recovery is unlikely until people are confident that it is safe to re-engage in a broad range of activities. If progress toward our goals were to slow, the guidance would convey our intention to increase policy accommodation through a lower expected path of the federal funds rate and a higher expected path of the balance sheet. Our guidance for both interest rates and asset purchases will keep monetary policy accommodative until our maximum employment and price stability goals are achieved, and that's a powerful message. As I have emphasized before, these are lending powers, not spending powers. The current economic downturn is the most severe of our lifetimes. It will take a while to get back to the levels of economic activity and employment that prevailed at the beginning of this year. And it may take continued support from both monetary and fiscal policy to achieve that.
Joining us now is Jane Foley, Rabobank head of FX strategy. Jane, was that perfectly calibrated? So Jay Powell talking about, this forward guidance, interest rates low until 2023, whilst at the same time, sounding dovish, but pointing a much more optimistic picture for 2021.
Well, that's right. But I think at the end of the day, the message that the markets heard was the Fed has got our back. And in a way, that's what investors have been hearing all along, the impression that the Fed will use its balance sheet to keep interest rates low, to make sure that there's plenty of cheap money and therefore to keep risk appetite quite high. I mean, there was plenty of warnings from the Fed, and there have been from policymakers all the way along the curve that we haven't seen the end of this pandemic yet. And of course, the data with respect to hospitalizations, etc., continue to suggest that, but the market continues to look through what is likely to be a very difficult couple of quarters into that light at the end of the tunnel, and keeps on being promoted, really, or the risk appetite is being promoted by that belief that interest rates will remain low for quite a long period of time.
Jane, Tom probably wants to talk about dot plots, but how much lower can dollar go?
Well, that's a really good question. Of course, it depends against which currency. We tend to calibrate it in our heads a lot against the euro. That, of course, being the currency pair that's traded the most. And of course, what we've seen in the euro and many other currencies, the Aussies coming to mind, the New Zealand's coming to mind, is strength in their own right, really, over the last 6 to 7 months. The Aussie, the New Zealand dollars overnight, both really surging. But they have, pretty good economies. The Australian employment data again surging for about the fifth or the sixth consecutive month. We've seen really strong growth from New Zealand. Of course, they have both economies which have really managed this pandemic well. And once they've closed their borders and certain sectors are hurting because of that, they're performing, really quite well compared with some of the countries in Europe and the US.
Jane, I'm going to introduce a chart in the next block on dollar Canada. Right now, I want to talk about the blended all-in index, the DXY index. Folks, it's really confusing about 3, 4, 5 blended indexes that pros like Jane Foley use every day. On DXY, Jane, I could literally teach a course on its elegance, and it's what's called gamma convex. It's a log chart with increasing acceleration to a weaker dollar, rather. Should we be concerned about the gamma out there in that blended big currency index?
Well, we should perhaps be concerned, but we should also be aware that the DXY index specifically is very heavily biased towards euro-dollar. The weighting of euro-dollar is absolutely enormous. So from that point of view, I think you can be better off looking at a different index, some of the more effective index. For instance, there's the Bloomberg one or the one from the Bank of International Settlements. But the DXY is tradable, and perhaps that's why people do look at it so closely. But to be honest, whichever dollar index you're looking at now, you are going to see dollar weakness. Right. And the Fed has been really successful, I think, at manipulating that this year.
Jane, we've had a 4 standard deviation move on the Bloomberg dollar index off of the election. Let's call a pivot November 3, November 4. These are abrupt moves. How abrupt are they for other nations dealing with the new weak dollar America?
It's, I do think that this is a real significant event, perhaps even a disruptive event for many different central banks. Now, they're not all going to roll over and take this. Nobody wants a weak currency, an environment where you have very little inflation, and in a world where we see, elevated levels of unemployment, perhaps, low levels of wage inflation. Nobody wants a stronger currency. So, yes, the Fed has got the biggest balance sheet. Perhaps it's got the most power, therefore, to push over the dollar. But other central banks will also be pushing back with quantitative easing policies, particularly, and maybe more negative interest rates, perhaps. So they won't necessarily roll over. They will push against the weaker dollar, but the Fed perhaps has got that biggest balance sheet.
Jane, thanks so much. Jane Foley there of Rabobank stays with us, and we'll talk about currency manipulation and what that means for a country labeled with such a name. Now, coming up in the next hour, David Rosenberg Research Founder and Chief Economist. That's coming up at 6 a.m. in New York, 11 a.m. in London, and this is Bloomberg.
Surveillance, good morning from London, from New York. Single best chart. We usually do it in the next hour. We will do it in the next hour, but it's so important, particularly with Jane Foley with us with the Rabobank. Let's launch it right now. Here's how the pros look at currency moves. They look at it in standard deviations, and there's no question about it. It's a standard deviation move from the left over. It is a 6.3 standard deviation move. I have rarely seen that. It's what's called a fitted chart. It's a little misleading, but the bottom line is we are getting big figure moves in some of these currencies. Jane Foley, what is the concern for Canada adjacent to America with such a strong Canadian dollar?
Well, again, this isn't something that any country really wants. Now, of course, we're not anticipating that the Bank of Canada is going to push against this with any interest rate cuts right now. But interestingly, unlike the US, the Bank of Canada has said that it would use negative interest rates if need be. But I think the bar is set really very, very high for them to do that. So Canada, of course, is also influenced by the oil price. And oil prices are, holding a little bit higher than they were. That's also going to support the Canadian dollar.
Yes.
So at the moment, perhaps it's not going to be of significant concern, but further down the line, they don't want to see that stronger Canada dollar.
Where is further down the line? This is the money question, Jane Foley. End of the year, it's an unfair question, folks, but this is always stochastic. It's always political. It's always a shouting match. Are we weeks away from that, or can it really gestate over 2021?
I think we would need to see the pace really picking up for a sustained period for them to really want to do anything with policy. And I think what we'd see first of all is perhaps a little bit of jawboning, perhaps warnings that they are prepared to do more with policy if need be. But the weaker dollar, the pace of the weaker dollar is something which is going to make an awful lot of central banks really quite uncomfortable right now. And again, looking at a central bank like Switzerland, it must be a real poke in the eye yesterday to have to suffer the weakness of the dollar and then have the US calling them the manipulator.
Fran, I can't say enough how unusual 6.3 standard deviations is.
Yeah, it certainly is, Todd. I don't know if we have a Swiss franc chart. I'm kicking myself because I should have done it. But basically, the Swiss, Jane, got labeled a currency manipulator by the U.S. due to their massive intervention to actually prevent the franc from appreciating. And this is something that was also given a blessing by the IMF. So what else could Switzerland have done, and how problematic is that label for them?
You know what? I have some sympathy really for the Swiss National Bank and the Swiss authorities. They've had an overvalued exchange rate for a very long time. And in fact, anyone who's ever been to Switzerland will sort of understand that. It is an expensive country. They already have a negative interest rate. And I think what's really important here is that when we go back to the years when we had G7 communiques saying that markets should be setting foreign exchange rates and not central banks or not treasuries, that was really in the days before QE. Now we have a world where so many central banks are using quantitative easing, and I think the real key question here is QE a currency manipulation tool? Because the Central Bank of Switzerland can't use QE. Their capital markets aren't developed. They wouldn't be able to use quantitative easing. So from that point of view, they say that they're using FX intervention instead, and therefore, given a huge amount of quantitative easing by the Federal Reserve, is this a case of pot calling the kettle black?
Yeah, and Jane, I guess, the million-dollar question is we also have a new administration taking over in the U.S. Does a Treasury under Joe Biden take a hard line like this administration compared, towards Switzerland and other countries?
Well, that's going to be interesting to see. I don't expect there's going to be a very swift change. I think the new administration is going to watch and see, what develops over the next few months. But generally speaking, the market is expecting a far less bellicose response from this administration, and perhaps a more conciliatory approach. They are, from European terms, the new administration is expected to sort of build bridges, and some of those bridges that Trump had knocked down. So I think, generally speaking, people would expect perhaps the Treasury to take a stand back. But again, the term currency manipulator is drawn not just from the FX intervention, but by three terms.
And Fran, what's so important here is the all-important trip to Davos, the annual trip to the McDonald's in Zurich to save money for Al from New Jersey. I just ran it through the Jane Foley Rabobank meter, and that used to top tick $14 a meal, and that's up to $17.34. $17.
Unbelievable.
Fran, that is, you're down at that fancy cafe knocking out $80 lunches, and I'm there with $17.34, saving money.
I mean, I have to say, yeah, okay, Tom, if you believe that, you'll believe anything. But it is 2020, so maybe some people will believe it.
We're not going to be there in 2020.
A Big Mac at McDonald's in Zurich, probably just as expensive as a meal at Rolls. That's news you can use. Jane Foley, Rabobank head of FX strategy, stays with us. Coming up on Bloomberg Markets, Jeffrey Curry, Goldman Sachs global head of commodities research. I was looking at a great chart looking at copper and what copper has been doing over the last 2 months. It's an interesting story. That interview, 10:30 a.m. in New York, 3:30 p.m. in London, and this is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need is surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Forex Surveillance, Francine and Tom from London and New York. Now let's get more on this breaking news story. The Élysée, the residence of the French president, says the President Emmanuel Macron has tested positive for COVID-19. Let's get straight to Paris with the latest. Our Anya Nussbaum. Anya, what do we know the president is feeling? Does he have symptoms? Are they severe?
Hi, Francine. The president does have symptoms, and Élysée official told me, though, that they are mild symptoms, and the president is self-isolating for now, and the tracking is ongoing right now. We just found out that the president of the National Assembly is going to isolate as well, and we'll know more soon about who else is a contact case and needs to isolate because they were in touch with Macron.
Anya, what's the virus like in Paris? I mean, Mr. Macron is going to be tied up in this with all the notoriety, but what do you see on the streets of Paris?
I see people wearing masks, and it is a pretty bad time for Macron to catch COVID, I'd say, because we are in a few days going ahead, we're running to Christmas, which is in France a time when people traditionally go see their families and see their parents, their grandparents, and when the government will lift restrictions on the curfew, exceptionally for Christmas night. We're also getting close to New Year's Eve, where people are going to party, and as the government minister told me, France will deploy enormous amounts of police to make sure that the curfew is implemented. So yeah, it's a pretty bad time with France under curfew after 2 strict lockdowns that ended earlier this week.
Thank you so much, Anya Nussbaum, there from our Paris office. Of course, Macron is the third leader, Tom, of the G7 countries to contract COVID-19. We had President Trump, we had Boris Johnson, and now the French president. We understand his prime minister is also self-isolating, and he had a lunch with the Portuguese prime minister yesterday. On Brexit, we need to talk about Brexit. Michel Barnier saying there is good progress on Brexit, but that the last stumbling blocks remain. I think the mood is that there's a narrow path to get a deal. We'll see exactly what that is, and if we have an agreement, and then if we have an agreement, it still needs to be ratified by the UK Parliament, so they could be recalled from the recess next week. Coming up, we speak with George Papakonstantinou, the former Greece Minister for Finance. We'll talk, of course, about Europe, we'll talk about Euro level, and we'll talk about Brexit. This is Bloomberg.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise, but also the waves. The significant wave height, which is the top 1/3 of the waves, if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keene in New York. Tom, former ECB President Mario Draghi and ex-governor of the Reserve Bank of India, Raghuram Rajan, urging policymakers to take action against a looming global solvency crisis. Now, the report warns that debt-laden companies threaten to undo a post-pandemic recovery and cripple economies in the process, and, quote, a cliff edge of insolvencies are imminent, masked only by massive liquidity injections from governments around the world. Well, joining us now to talk about this and other European matters is George Papakonstantinou, former Greek finance minister. Mr. Papakonstantinou, thank you for joining us. First of all, we keep on hearing about a solvency crisis, being at the brink, being the real danger to the world economy like 2008. Is it, or can we actually avert the crisis because we're talking about it?
Well, we are in a more benign environment of low interest rates, but of course the actual headline debt levels are much higher, both in the private and especially in the public sector. So I don't think we can dismiss it as an issue which is not here, and this is exactly what the G30 report is saying. At the same time, I don't think it's an imminent danger. I think that we will need to see how we get out of the pandemic, spending whatever we need to spend. After that, there will be a day of reckoning. So it's not too early to start planning ahead. There's some very good ideas in that report regarding the corporate sector. Governments will also need to see what they will do with their balance sheets when this is over.
What are the main things that we learned in 2008 and the subsequent crisis that we can put in place now?
Well, first of all, I think we learned that central banks can go a very long way in maintaining liquidity into the system, keeping spreads low, not allowing divergences between countries to rear up their ugly head and destabilize markets. So, of course, this cannot be done forever. They cannot continue to be, to keep those assets on their balance sheets. So at some point, gradually, there will need to be some way of governments, first through growth, of course, but then also through additional tax revenues, to maintain to keep those debt levels in check. What we have learned is, of course, that what's important is less the actual debt to GDP ratio. What's more important is the ability to service that debt. So that shift from the headline figure to understanding the dynamics of debt, that's a very important one.
I want to congratulate you and Mr. Papandreou, who long ago and far away began the first steps of moving a nation from what became a 31% yield down to the present 1% yield. And I understand within Greek politics, people can argue about who gets the credit and all that. It is a remarkable accomplishment. Describe the collective courage it took to do that and apply that collective courage over to the challenges now, particularly with the pandemic across Europe.
First of all, that's very kind of you. There was collective courage in the sense that we had to take a step back from the brink and do what we needed to do to bring deficits down and restore competitiveness, and then slowly regain market confidence. And at the same time, our European partners had to rewrite the rules. And I think what we're seeing today, actually, is a reflection of that. If you compare within Europe, the reaction to the pandemic with the reaction to the Eurozone sovereign crisis, it's day and night. Back then, it took the ECB a couple of years to really until we got to the whatever it takes statement by Mario Draghi. This time it took a couple of months only. The European Council moved much, much faster. The European Commission immediately suspended fiscal rules. So we have learned, all of us.
You told me in the heat of battle once, and I'll be honest, sir, I can't remember if it was on or off the record, but we're going to make it on the record right now, whatever it was. You told me the goal here was to get Greeks to bring their capital back to Greece. Did you succeed?
I think that once you are in a situation where you have restored growth and you've restored your fiscal fundamentals and your borrowing conditions are quasi-normal, I think then you can start repatriating capital and much more attract further foreign capital in Greece, because you need that, because the gap is huge. The investment gap of the country is huge. It cannot be filled just by domestic forces alone. The problem is, of course, that as Greece was coming out of and regaining a footing, COVID hit. But this is a different circumstance in the sense that Europe is acting differently. We're not going through the same kind of austerity and self-flagellation that we had to go through in the first crisis. So hopefully when this is all behind us, we'll be able to resume around 2018, 2019, rather than go back to 2010 and have the Sisyphus problem all over again.
Mr. Papakonstantinou, when a leader of G7 countries tests positive for COVID-19, does it change the trajectory of the government policy? We just heard Emmanuel Macron is actually positive. He tested positive for COVID-19 today.
First of all, best wishes for a quick recovery. I think it makes it real to people that no one is immune. And therefore, perhaps it facilitates kind of some restraint over the holidays, which is going to be a problem all over Europe and all over the world. It does, of course, create an issue in terms of governance with big decisions coming up. But I think that the two big things that at least Europe had, to put together the new financing package, that's done. B, Brexit. That seems to be in the capable hands of the negotiator, Michel Barnier. So let's hope that Emmanuel Macron's illness is not going to detract, because he has, over the last year, shown leadership in Europe and being able to move the ball forward.
Thank you so much for joining us. George Papakonstantinou, their former Greek Prime Minister and, of course, chair of the School of Transnational Governance. Now, in the meantime, Vladimir Putin, the president of Russia, is holding its annual press conference. I think we're an hour and counting. We're expecting this actually to be 4 hours long. The president is virtually speaking to a lot of socially distanced reporters. We're expecting COVID-19 to come up amongst the questions of foreign policy and, of course, the Biden administration. Now, let's get straight to the Bloomberg First Word News in New York City. Here's Karina Mitchell. Hi, Karina.
Francine, congressional leaders are still haggling over the final details of an almost $900 billion coronavirus stimulus package. Americans would get a one-time $600 payment, and there would be $300 per week in supplemental unemployment benefits, as well as aid for small businesses. But Democrats will have to give up their demand for aid to state and local governments, and Republicans will drop their call for lawsuit liability protection. And Bloomberg has learned that the White House is now holding urgent meetings to address that hacking link to Russia. The talks include officials from the FBI, National Intelligence, Homeland Security, and the National Security Agency. A number of U.S. agencies were attacked by hackers believed to be tied to the Russian government. In Germany, a record increase in COVID-19 infections. Authorities reported more than 45,000 new cases today. That's over twice the number from the day before. Earlier this week, fatalities also set a daily record. German Chancellor Angela Merkel has hinted that a hard shutdown that just took effect will remain in force beyond January. And the first major winter storm of the season is battering the northeastern U.S. It dumped rain, ice, and up to a foot of snow from Virginia to right here in New York, and it's now moving on to New England. At least 3 people were killed in car crashes, and the storm put more stress on hospitals struggling with the coronavirus. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Tom.
Karina, thanks so much. Futures up 20, Dow futures up 132. The VIX comes in sprightly 22.01. Watching all sorts of action in the foreign exchange market as well. With an update on the spread of this pandemic, and from her Western New York, it has been absolutely brutal. Kathy Hochul will join us. Catherine Hochul, the Lieutenant Governor of the Empire State. Look for that in the 8 a.m. hour. Again, futures up 20. Stay with us. This is Bloomberg.
Mkokoteni ya stima ningeipata naweza sikia vizuri sana kwa sababu inatumia nguvu sana.
The advantage of the electric uncut over the manual conventional uncut is that one, it increases the productivity level of the users. Two, it is eco-friendly in that it does not pollute the environment. Three, it increases the income level for their users in terms of loading capacity and also in terms of productivity.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Good morning, everyone. Bloomberg surveillance from New York, from London, the news flow extraordinary. We're focused on Mr. Macron and his illness and a lot of other good news as well. There are times when a show can come to a complete halt. We do that on this show with birthday greetings. Yesterday on our Fed special, the show stopped. Is Scott Minerd, always informed at Guggenheim, framed Bitcoin from a lofty 22,000 up to 400,000. Here is Guggenheim's Minerd.
I remember when we first did QE, my comment to people at the Fed at the time is I don't know how you ever unwind this without having some financial accident. I think we got that. We saw that in the taper tantrum, and then again we saw it back in 2018. So now, I think that any unwind of these programs or even stopping them leaves the Fed and the economy vulnerable. Specifically of concern is the corporate bond purchase program, and then the municipal debt or the public financing program, where we see organizations like the MTA who have basically tapped out in capacity, but we have a long list of municipalities in this country that are going to have severe issues within the next 6 months, regardless of a vaccine or anything else.
Another asset I'm looking at is Bitcoin, which is up 6.3%, surpassing $20,000 for the first time. Tom mentioned it earlier. Scott, Guggenheim has reserved the right to invest up to 10% of its macro fund in Bitcoin. Have you guys started buying yet? And how much is this decision tied to the Fed's extraordinary policy?
Well, to answer the second question, Scarlett, clearly Bitcoin and our interest in Bitcoin is tied to Fed policy. and the rampant money printing that's going on. In terms of our mutual funds, we are not yet effective with the SEC, so we're still waiting. Of course, we made the decision to start allocating toward Bitcoin when Bitcoin was at 10,000. It's a little more challenging with the current price closer to 20,000. Amazing, over a very short period of time, how big of a run-up we've had. But having said that, our fundamental work shows that Bitcoin should be worth about $400,000.
Whoa.
So, we're going to, even if we had the ability to do so today, we're going to monitor the market and see how trading goes on valuation, but ultimately look to buy it.
How do you get from where we are now out to 400,000? Is it just based on scarcity?
Yeah, right, Tom. It's based on the scarcity and relative valuation, such as things like gold as a percentage of GDP. So, Bitcoin is actually has a lot of the attributes of gold, and at the same time has an unusual value in terms of transaction.
Scott Minerd with some Fed chat and then a bombshell on Bitcoin as well. One of our experts on Bitcoin, Edward Vanderwalt, joins us right now from Bloomberg MLive. Edward, why has Bitcoin doubled? Let's start with first principles.
Well, it's doubled and it's doubled again and then doubled again, right? I think Bitcoin has surprised a lot of people. A lot of people have been writing it off and said this thing at some point is going to zero. I know because I was one of them. And, we keep eating our words. And at some point, when Bitcoin keeps surprising you and it keeps going up, you've got to accept that there is a pool of people out there that is willing to buy this stuff. Yep. And, so we talked a second ago about the supply side and how that's fixed. But what has been proven, I think, over the last year or so, is that the demand side is equally stable, right? There are people out there that will buy this stuff.
Just because
if you keep pinching off, yes, sir.
Just because of time, I want to, you've just explained the Marshallian cross perfectly. Great. Who controls the scarcity here? Who has the responsibility to control the supply side of this commodity?
Well, the supply side is stable and is written into the algorithm, right? So unless the miners get together and say, look, we are going to change this, there's only ever going to be 21 million Bitcoin. And therefore, whatever the demand side is out there is going to have to match up with the other side of the equation.
Okay, Eddie, I mean, you haven't been called Edward since you skipped school at age 4. When you look at the price of Bitcoin, who's actually buying it right now? Is it institutional investors? And if it is institutional investors, is this just going to grow and grow for the simple fact of who's buying it?
I think institutions are waking up to it. But I think there's an important distinction here. I think institutions are buying this. They're saying, look, okay, clearly this asset class is going to be with us for the long term. But it's where it sits in their portfolios that I think is interesting. I don't think that they are saying, look, this is exactly like gold. We're going to sell all of our gold. It's going to do the job that gold did in our portformos because gold trades at a certain volatility and so on. I think where it sits is somewhere like, your venture capital.
Eddie, I get it on gold, and obviously I don't agree. We're going to have the conjunction of Jupiter and Saturn on December 21st for the first time since 1226. In 1226, royalty were clipping coins because of the scarcity problem and because of their mode of inflation at that time. Who's going to start clipping the coins within the system of Bitcoin that will widen out the scarcity, diminish the scarcity, and threaten this huge hyperbolic price lift?
Yeah, but that's on the assumption that it turns into a unit of exchange, right? Because if it turns into a unit of exchange, which is a million miles from where we are, but if it comes to that point, then yes, then the deflation problem becomes real. But I don't think anybody is outside of the hardcore Bitcoin community is talking about that right now. I think people are talking about the store of wealth relationship. And I think that is a possibility for Bitcoin in the long term. But right now, it is a speculative bet that perhaps it becomes a store of value down the line.
Eddie, thank you so much. Eddie van der Walt there, Bloomberg MLive European strategist. And Tom, what you said was nonsense. Everybody knows that Jupiter and Saturn crossing gives us a Brexit deal. Nothing to do with Bitcoin.
That's true. The conjunction of Jupiter and Saturn is that Brexit ends when they do that. The Christmas star, December 21st. This is really cool, Francine, seriously. This is absolutely stunning. This is back, Francine, to Louis IX, who's the guy that built Saint-Chapelle. That's how far back this
If only he could also remember his password for Bitcoin. Coming up in the next hour,
Store of
Austin,
value.
Norges Bank governor.
Gold. Yeah,
That's at 6:30 a.m.
ask the
in New York.
Norwegian bank guy about Bitcoin.
11:30 a.m. in London. I'll ask him about interest rates and inflation. Tom,
I'm asking him about
we'll talk
Bitcoin.
about Bitcoin. I know you are. We'll ask about passwords and remembering them if you bought into Bitcoin. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg Surveillance. Good morning, everyone. Futures up 21. A nice persistency to the tape. Dow futures up 132 right now. That level 30,206, about $100 below, 100 index points, I should say, below a record high. Right now on the stimulus, Emily Wilkins, Bloomberg government, Biden transition expert. She's down there. She's watching all of this. Emily, Speaker Pelosi says when we're ready, we're ready. How close is ready?
That is the question that everyone on Capitol Hill is asking this morning, Tom. The deadline is the very end of Friday. There is some optimism among lawmakers that they can make that deadline. If not, we're going to see them work into the weekend. Both sides have already pledged that they will not leave Capitol Hill until an agreement is reached.
Okay, well, that's great. I'm glad they're falling on the sword, and I get the idea there's negotiations as well. Where is the point of compromise? What is the distinction locked away in those smoke-filled rooms?
is some disagreement at this point over whether funding from FEMA accounts can wound up using for coronavirus. I think there are a couple other minor sticking points left in there. But the two major sticking points, the questions about funding for state and local government and liability protections for companies, those have both been resolved in a way. They're not going to be in the bill. So we might see more debate on those down the line. But for right now, both of those items have been moved off the table.
So what are the chances, Emily, of getting it before the Friday midnight deadline?
We've seen a lot of progress in the last couple of days. I've covered Congress for a number of years now, and nothing motivates these guys like the deadline for going home for a planned vacation. So I think there's definitely a chance that we see this before the deadline. If not, it seems like lawmakers think they could potentially wrap this up before Christmas Day.
Emily, funding is flooding into the Georgia Senate race, but it's mainly from out-of-state donors. What does it tell us about the state of the race?
This is something that we've seen a lot throughout Senate races, particularly with Democrats, but also with Republicans, that there's just a ton of funding, particularly in this very virtual, very online year from different states. And I mean, right now, the two Democrats, Jon Ossoff and Raphael Warnock, they've outraised their Republican counterparts. But remember, a lot of Democratic Senate candidates outraised their Republican competitors in the general election, and Republicans still won a number of those races.
Emily, quickly here, what's the so what of a one-time $600 payment? There's a lot of research that shows the rich people just pocket it away, pay down charge cards, and the poor people do a one-off thing like pay the back rent. What's the so what of $600? It's a rounding error even for the great middle class.
The $600 has been something that's really been pushed, particularly by progressive Democrats, but also by some fractions of the Republican Party as well. It was something that President Donald Trump had been pushing for a while. Yep. And their argument is basically this. Look, people have lost their jobs. They're being forced to stay in. Businesses are forced to kind of be closed at this point. And therefore, the government needs to, in some way, directly reach out to the American people, say, we understand that you're struggling. Here's a check for some money to help you out through the next couple months.
Emily, thank you so much. An ongoing battle. Maybe we'll see some agreement today. Ms. Wilkins in Washington, our congressional reporter. Futures up 21, Dow futures up 135. Thrilled that David Rosenberg will join us in the next hour. We'll talk to David Rosenberg about the whispers of inflation and the reality of disinflation and how yield speaks. Equities to the moon. This is Bloomberg. Stay with us.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
What we're trying to accomplish at Bumble is that you can drive profit and purpose, and they can coincide, they can coexist, and in fact, they fuel one another.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
This morning, quote, we can kind of see the light at the end of the tunnel as the chairman kind of lifts the markets, the dollar kind of slumps, and the inflation-adjusted yield, well, it goes kind of ever more big negative. Tokyo is, quote, under strain. Germany, a hard shutdown. Mr. Macron, very ill. Before year end, will America see 4,000 deaths in the span of 24 hours? And Speaker Pelosi, she says we'll be ready when we are ready. Ready better be by Friday. Good morning, everyone. This is Bloomberg Surveillance from New York, from London, Francine Lacroix and Tom Keene. And quite frankly, we are looking at Paris. News of Mr. Macron, Francine, always difficult, even at age 42.
Yeah, so he's not very ill, Tom. What we know is that he has mild symptoms, but they wouldn't exactly tell us what those symptoms are. We know that he will continue working from a self-isolation, and he will self-isolate for 7 days. Now, in the last 20 to 30 minutes, we've also dug around to see exactly who he has seen. We know, or we understand from people close to him, that he always social distanced, that he always wore a mask when speaking to his team. That could make a difference. That probably will make a difference. We also know that the Prime Minister will self-isolate, and I believe, Spanish Prime Minister will also self-isolate until December 24th. But certainly, he is the third leader of a G7 country contracting COVID-19.
Well, it will be interesting to see. And, of course, the news around the world really challenging on